Good morning and welcome everyone to the Schwab Coaching YouTube channel for our Wednesday edition of Trader Talk in today's market. I am your host, Kevin Horner. I'm joining you from a beautiful Denver, Colorado today. As usual on a Wednesday, pleased to be joined by my friend and fellow Schwab coach, Mr. Brent Moores. Good morning, Brent. How are we doing today?
Everything is great, Kevin. It's interesting to look at the markets, and I'm just glad to be with everybody. I see familiar names in the chat. Thank you all for joining us each week, and pretty much most days here on Trader Talk. So it's wonderful to be here.
I totally agree with you about seeing all those usual suspects in the chat. Obviously, love seeing the consistency of attendance here. We're always glad to have you. We're also glad to be joined by Barb Armstrong this morning. She's there in the chat. We'll get to comments and questions. Brent and I are unable to, but we're going to absolutely keep an eye on things for you here as we discuss this fantastic bounce back rally in the broader markets. We're going to look at a number of key details for you all today as we set the table for the remainder of the week. Of course, it's been a great start. Let's hope that what we've begun this week finishes just as strongly. So we'll talk about a number of those things. But before we do, let me remind you to make sure you're following the three of us on X. We're all available there. Try to provide for you some charts and data points throughout the week. So you can follow us at Barb Armstrong CS, Brent Moores CS, and Kevin Horner CS. The best place to find us when we are not hosting classes for you here. Now, make sure you're subscribed to the channel. Remember that we've got live content for you from market open to about an hour past market close every day that the market is open. So check in with us each day. Now, let's get to our disclosures and then we'll dive in to the charts with you all. So please remember that everything we discuss should be considered informational and educational exclusively. We do not make recommendations. We do not endorse any approach to trading the market. What we will do is utilize technical analysis to review areas of the market with you. We'll offer up insights that traders who use technical analysis might consider deploying with their own process, but these are just ideas and educational topics. So please don't rely on technical analysis as the only means of your research, though we do think it can be one of those decision-making pieces. And we often mention, everyone, that we are out and available for you here beyond the shows that we teach here on the YouTube channel. And I want to mention that we'll be in Boston this weekend. In fact, I'm heading out first thing tomorrow morning to attend this technical analysis and options strategies workshop there in Boston. We're also going to be in Chicago for our middle of May market drive, and then the advanced options discussion coming up in Santa Clara. If you've not attended one of these, we do invite you. Of course, these are all complimentary in nature. Come on out. We take care of parking. We offer lunch, and you have an opportunity to basically take the YouTube channel, the YouTube education to another level by being there in person. And we really enjoy seeing you face to face when you have the chance to come out. So register for these events. Come visit us and participate when you have the chance, everybody. All right, Brett, with that, let's take a look at what's going on. We had two fantastic days to kick things off this week here. We had Monday and Tuesday, big, beautiful green candles. It's not much more we can ask of the market here, except as we approach that 7,000 level, a pretty important one.
7,000 and 6,800, Kevin. Those would be the levels that
Yeah.
I would say right now are the significant ones. 7,000 is kind of a resistance. 6,800 is kind of a support level. And which way does it break first? Well, right now, hey, we're up for the day. Admittedly,
Mhm.
we're about 2 minutes into the market day right now, but it's right there, and we've bounced back. And can we break through it? And if we break through it, can we stay through it for more than a day or two, or is it just going to be an intraday break? Those are all questions. But right now, the momentum is all up. You can see that RSI at the bottom of the page. Just how strong the move. I mean, we were in this oversold area at the end of March, and we have now swung up to almost the level of 70 here on that.
It's bonkers, Brent. You're
Yeah.
absolutely right. March 30 oversold, and here we are, April 15, tax day of all days, possibly into overbought conditions. I don't know if you get too many moves that are that speedy in nature from oversold to overbought. And granted, we aren't there. We're almost at 68, but it is kind of notable, of course. So, Brent, as we approach that level,
Yeah.
what are we thinking about? Because traders certainly, if you've, I guess it depends on where you put your money to work, doesn't it, Brent? I mean, if you were a buyer in the lows back here, you may be still long into this 7,000 level. This becomes an area for some profit taking, doesn't it?
Absolutely. I mean, is this a buy the rumor, sell the news type thing here where, we've had some not great news maybe in the market and we sold off and now it's come back. The market has done this lately
Hmm.
though. If you go back to do you remember the tantrum of last year? In fact, can you pull up a little bit of a longer term chart here? Look what
Yeah.
happened. We got a huge sell-off.
You want on the daily or would you like a weekly?
Doesn't matter actually.
Here's the
Doesn't matter.
daily.
Whatever is easiest.
Yeah.
Okay. So here's the daily. So that's the sell-off, huge sell-off that we had, and people were very worried about tariffs. Tariffs didn't go away right away, and yet how many months did it take to just zoom back up to its prior high? And
Yeah.
that was like a 25% or whatever drop, and it's we just went right out of it, even though the news didn't completely pass. Let's go back. Let's go back to a 10-year chart, Kevin. Let's talk about COVID here for a
You
sec
got it.
and go to 2020.
Here we are.
We had a massive sell-off because of COVID. COVID was obviously a massive event. How long did it take to recover back and get completely out of the sell-off that we had related to COVID? Was COVID done? And what time did we recover? It was later in 2020. The effects of
Yeah.
COVID were massive and they continued on for a long time. And I don't mean that, the medical effects. I mean, effects on the economy. Yet the market just snapped right back out of it. Well, here's just kind of that in microcosm. Is what it seems like with this latest Iran war oil spike situation. It just to me seems almost like a buy the rumor, sell the news type event.
Very interesting view. You're absolutely right. I want to give the numbers to these moves. First of all, this bounce back 22 weekly bars, okay? And this bounce back was 12 weekly bars. So this one took a little longer, right? You're looking
Yeah.
at more like 4.5 months on this move on the weekly. And then this one was more like 3 months on the quick bounce back into the zone of resistance. But and when we talk about resistance, I think that's the real takeaway, isn't it, Brent? Is that this doesn't have to act as resistance, right? We recognize that as we move toward resistance, if we don't get through that ledge, well, then we've got something against which to balance our risk, right? We can understand traders taking a little risk off as we rally into that level. However, moves through 7,000, especially if they come with conviction, Brent, should be respected. And the chance of breaking through here is certainly available to us. There could be some enthusiasm, but as always, Brent, I'm going to fall back on what I often do, which is the reminder of risk management as it relates to the size of our trades, our comfort to
Yeah.
stay long with the positions we've got, and confirmation. What is it we're going to look for beyond 7,000? It might be one of two things. A couple of consecutive closes above 7,000 would be significant, but some traders, Brent, might look for something more like a percentage move through 7,000. They might say, hey, it's only been one day, but we're 1%, for example, above a resistance level. That could be sufficient to bring traders into the market at that point.
Yeah, it could. And even if let's say we break resistance and we stay above it and it becomes a new
Mhm.
support level. The level of move that we've had, it's just hard to believe. And I don't know what the future is going to hold here. I really don't. But it's hard to believe that this move at the rate we're going is going to continue on for that much longer because um, because unless we have just like all the economic numbers, which are still a little bit iffy at times, inflation is still a concern. It hasn't gone away. Economic growth isn't, just
Right.
booming necessarily. Uh, those are maybe the things that may propel it forward. But so it would not some profit taking would not surprise me. It would actually surprise me a little bit if we didn't have any profit taking. But who knows? I've certainly been wrong many, many times in the past, Kevin, as to what's going to happen here.
Hey, don't steal my thunder. I'm wrong more
Uh,
than you. Don't get me right here. Don't assume that I'm on the right side of things. I try to be as best I can, and yet I often get reminded that the market does what the market does, regardless of how I feel about it. I do want to give traders a couple of things. One, I wanted to throw up a Fibonacci retracement level just because I wanted to look at the potential targets if we were to break 7,000 with any
Good.
conviction. And I'm
Yeah,
just
good.
going to draw this from basically the peak to our trough here. And then I'm going to close this down a little bit to give you an idea. Now, this is by no means validated at this level, everybody. However, traders who are considering a possible breakout could utilize this Fibonacci level and the extension to validate a ledge at about 7,400 should the S&P break out. That doesn't mean it has to get there, of course. That's just one way of evaluating it, but it would require, of course, a close above 7,000, and it would require some additional participation by some of that money that might be denying what we've seen here of late. So I wanted to give everybody that. And then there was a request to make sure that we looked at the equal weight and see if there was any difference here. So let's pull up the SPXEW index here, the equal weight index. And you can see, Brent, this is a little different.
It is.
We were talking about how equal weight was making peaks at the end of March or end of February, beginning of March. The equal weight is lagging now once again.
Are we back to the market that we had before? Because before it was, these mega caps just pushing the whole market up, even though the rest of the market was a little bit lackluster. And then we
Hmm.
switched, and equal weight seemed to be catching up there, and some of the mega caps were lagging. Well, right now it seems like some of those bigger companies are outperforming and pushing the SPX as a whole up. And
Hmm.
yeah, so Jay Richardson brought up an important point in the chat, and we're not going to look at his symbol here or anything like that, but volumes declining a little bit on on S&P 500 stocks, and
Hmm.
um, that could be a sign of the rally getting a little bit long in the leg, so to speak, or it's just kind of a little bit longer. Uh, been maybe towards the end of a rally here. But yeah, that equal weight, interesting chart there.
Yeah, it is, but it's a bit of a reminder that when things get going in earnest, when we get good, strong rallies, more often than not, we're led by a couple of key groups, that being likely technology
Yep.
and discretionary, those being our two big boys that tend to be, universal in the United States, at least in terms of leadership. So if this is lagging as we see here, chances are it's because we're seeing tech kind of get itself back into gear. Let's move over to the NASDAQ. We'll look here at tech momentarily, but let's kick it over to the NASDAQ 100. We're going to see a similar look at things here. Two of those big green candles to the upside on Monday, Tuesday, and closing in on our prior highs with what appears to be a double top in that 26,100 level. But again, Brent, when resistance is so clear, the reminder is yes, it can act as resistance. It could be a level from which we pull back, and yet it could also be a level that, if broken, could be significant for the bulls.
Absolutely. Another that's a very discernible, clear level that we have. And this looks very similar to the SPX. So I think a lot of what we said about the SPX from a technical standpoint is also going to be true for the NDX here. But so far today, it's the last 2 days we had huge candles. We'll see where we end up, but today a little bit more of a Midland day here, so to speak, so to start.
Yeah. At, at least at the moment. Yeah,
Yeah,
exactly. And again, we get these significant moves. We should expect them to at least pause for intra-period moves like this. It's early in the morning, so as much as we want to see another candle like this one or this one, it might take a little while to develop. So we'll certainly keep an eye on it intraday here. But the move over to the small caps, let's take a look there. We've had
yeah.
a nice bounce as well here. Small caps broke the downtrend line 5 days in a row, 6 days in a row of nice big candles here as well. And interestingly, let me pull this off here. Look at the gap here. We had this island reversal, this like dragonfly doji here, or gravestone even, at the end of that rally. And then that gap has basically been where we pause. So this is kind of an interesting spot for a trader from a risk management standpoint on the Russell, Brent.
Yeah, but I would say this, it's a similar situation where we kind of have a clear resistance, clear highs that we're right up against, as opposed
Yeah.
to equal weight. This is closer to what we saw in the SPX and the Nasdaq, and we've had that move up. Of course, news, this has been largely a news-driven market, can certainly change things.
Hmm.
The president indicated that he said the war is coming to a close very soon. I don't know how to interpret that. I don't know what that means, whether that's true or not, but the market seemed to like that, and we'll see what happens, but we're right there, clear resistance level. And again, RSI, we're right near the, kind of just showing about how strong we've rallied here in small caps along the way.
Hmm.
So yeah, I don't know that I think the narrative on this is pretty similar to what we've seen on those large caps.
I agree. Now, my next question really, Brent, is we've seen the same thing with all three, the S&P, the Nasdaq 100, the Russell 2000. Brent, do you take confidence or comfort from the fact that all three are doing the same thing at the same time?
Yeah, it's a more broad-based rally, and I think more broad-based rallies are more foundational and sustainable than if you just have it driven by, NVIDIA and Apple and Microsoft or something like that. So
Sure.
I think that's probably a good sign. We have earnings season too, everybody. We've had some financial stocks. We'll probably talk about a couple of those later, maybe, but over the next month, we're going to have a whole assortment of different stocks in different sectors, and corporate earnings can help to move the market. So we'll see. We need one
Hmm.
report probably isn't going to do that much, but just the accumulation of them all tend to help. And they tend to help on the market valuation sense. And market valuation is not typically a good way to predict short-term moves in the market. But, over the long haul, it can be more helpful. But, it starts with corporate earnings, really. And so
Hmm.
we'll see. That's important information we'll be getting over the next few weeks.
Brent, you're absolutely right. Obviously, the detail that comes out in the way of earnings needs to validate the price action, and then the forward guidance can give us something to work with to kick these prices to new levels, if validated, of course. But that's not the only thing. However, I know that a lot of traders are listening to the headline risk, and the headline risk continues to kind of keep us a little bit under wraps. And what I mean by that is maybe our comfort zone for being exposed to the market might be a little less due to all the headline risk. But if we are trading and taking advantage of the patterns that develop here, we've been provided opportunities. I mean, most recently, the gap here that all three major indices made, where we basically just set a new floor in with the gap on Tuesday of last week, where everything changed, right? When word of the possible ceasefire hit, everything has been optimistic since then. That is a significant development. that bears watching, and everything has shifted since then, and it's given us a new level to keep an eye on across the board. Additionally, you had the gap from Monday into Tuesday, and a lot of traders are going to use that short-term gap as an eyeball reference, a spot under which they might get a little more defensive, take a little bit of risk off. Use those gaps to your benefit. We're given the chance, everyone. I wanted to answer a question in the chat about our moving averages. Yes, we rely heavily on the moving averages here, where when we get the opportunity, when the market is actually trending for us, and we use the standard. So I'm using simple moving averages here. That's what I've got across at my tools up here. So my 20, 50, and 200-day simple moving averages are right on the chart here. And then I navigate when necessary. I'll just throw in just the 200 or maybe just the 50 where I can, just to make things a little bit more clear for us as traders. This is actually a pretty good indication, isn't it, Brent? Just using the 50 here, all of this time, support, 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 support. Now we're below it. It's resistance, and then we're back above it. So we've once more, just reminded of the way that these moving averages can help us define our risk levels along the way.
Well, yeah, that's so that's a potential support level, and furthermore, in terms of determining trend, you can use moving averages by looking at the slope of the moving average and the relationship between the index price or stock and and the moving average. So if the moving average is sloping up and the stock or index is above it, a simple way to think of that is, hey, that's going to be more of an uptrend. If it's sloping down and the index or stock is below it, that's kind of more of a downtrend. But right now, the market's been kind of swinging pretty rapidly. So, not so much of a trend indicator, but, potential support there right now. And just, keep in mind, this is the moves in the markets to a large extent are people trying to anticipate how things are going to turn out, with the Iran situation. But even if we get a good, a positive resolution here in the shorter term with Iran, it doesn't mean oil prices, which are a huge economic factor, are going to go back to pre-war levels anytime soon. Now, we've seen a drop in oil prices, but those economic effects can be lingering. And it's not just oil. I was seeing an article on helium as well. Helium, there's going to be likely a helium shortage here because a lot of helium gets out of Qatar, and the Russians are going to be limiting exports on helium. And so, there's a lot of different aspects in there that are probably going to linger regardless of the war situation.
Well, I think that's a great reminder, Brent, because the odds of things getting fixed, so to speak, quickly are pretty unlikely. And what I mean is, even though we might get a true resolution, the potential for elevated oil prices remains. Even though when I say elevated, I don't mean elevated versus the highs, but elevated versus where we came from, right? So,
Yes.
Oil was at $60 a barrel not that long ago, pre-event, and then it went from 60 to 120 plus. So anything above 60 is going to be considered elevated in nature. And the likelihood is we stay above that for quite a long time, I would think. It would take a while for that to unwind as we, kind of get things back in gear, assuming that's the way it goes. Speaking of, though, Brent, we should obviously take a peek at oil. I'm going to utilize my futures charts here. Now,
Yeah.
what I'm using here, I've got the futures of the S&P on the left, the VIX futures in the middle, and the oil futures on the right. Now, we're using this as a means of evaluation, really looking at the correlation and relationships between these. These are not a recommendation for trading futures in any way. Make sure you're familiar with the risk disclosure statement for futures if that's something you want to evaluate. But Brent, look, it's pretty clear here when oil drops, as we saw over the last 2 days, from 105 down under 90, it leads to big moves in the ES here in the S&P 500.
Yes, there's definitely a correlation between, well, an inverse correlation between the ES and the oil and
Hmm.
the VIX there. And so that's what we're going to see. And that's a VIX futures. And you'll notice that's looking at a future. And I think we just had a rollover or something on that with a jump on that. But if you look at the VIX, VIX is clearly down from where we were. Well, we're down to 17.75 on the VIX itself, which is lower than we've been in a long time,
Hmm.
since like the very beginning of March or something like that. So that's a kind of a positive sign for the market, a positive sign in terms of people feeling a little bit more confident about the markets right there right now.
Yeah, you're absolutely right, Brent. Let's bring this up. Here is the actual VIX, not the VIX futures, but the actual VIX. And I think the distinctive note here is all of this action under the 50-day, keeping us back below the 50-day moving average, and now, like you said, back below 20. The spike in the VIX, as often the case, not lengthy in time frame, a short-term blip. And we've been in basically reversion to the mean over the last few weeks here now. And this is a positive development. The question is, does this continue to get pushed back as we move forward here? We'll see. But this is positive for the broader markets, of course. So now we can expect spikes here if if we get any kind of headlines that bring us back to the concern around whether an actual ceasefire holds, especially as we get to the 2 week window. I'll remind you, it's been just 1 week ago, and the ceasefire was anticipated to give us a 2 week window to try and settle things out. So that's what we're waiting on, basically. So let's see if we can't get some clarity, a continuation of the clarity going forward here. Now, Brent, two things last that I want to look at before we get to some sector moves here. Semiconductors have been on an absolute bonkers rally. The move off of the low here is this is crazy. I mean, this is 30%. Is that
Yeah,
right?
yeah.
30% in 12 bars, Brent. That is absolutely insane.
That is. Now, let me just remind everybody, going back one sec. We talked about futures. We weren't talking about trading the future itself. We were just talking about the price of oil, for
Right.
example, and the price of the VIX. So we're not talking about trading the future itself. Now, the SOX. Well, hey, we saw a kind of this discrepancy in a well, this disparity between what the S&P 500 was doing and Nasdaq and versus the equal weight. Well, some portions of that were much stronger than other portions. One of those things that we're doing really well that were probably helping to drive it, were some big companies. NVIDIA is a big company. AMD and Micron are pretty big companies. Intel is gone crazy here over the past better part of a year now, I think. And that's the SOX. That's what's making up the SOX. And you just see this
Hmm.
huge move here on this. And you can see that reflect RSI. We're kind of in that overbought area, so to speak. Doesn't mean it's going to
I
uh,
know.
ch change or reverse itself, but um, it does mean again, going back to the profit taking we were talking about earlier, wouldn't shock me to see some profit taking on SOX names.
I totally would agree to an extent. I mean, obviously the rally has been super strong. As always, it comes back to, where did you buy it, right? Where did you start getting along, and can you view the level to which we've rallied as a sufficient amount of profit opportunity? One thing I'm going to do here again is I'm going to use that Fibonacci draw tool real quickly. I'm going to take it from the peak we had before the conflict to the bottom we made, and then that gives you a possible target zone in the ballpark of 90 through 75. Haven't gotten there yet, just less than a couple hundred points away, and there's no guarantee that we do get there, but that's just one way that some bulls might target it. And then another would be to maybe take the move from the low to this current peak. And if you expect this to be the peak, how far back could it come and still be considered a new uptrend? And that might be, I'm going to take this line here, I'm just going to activate it. I'm going to move it to the 50% retracement, which is kind of a commonality, Brent, on new moves, a rally into a
Yeah.
new rally, for example. You'll often see it give back about half of that rally and still be capable of making the continuation move thereafter. So that might give you an area for any pullbacks to maybe start to hold, for example.
Yeah, but just as a note, a lot of times we'll talk about bull flags or bear flags, and you get the
Yes.
pullback portion on the flag. And one kind of rule of thumb that some people will use is if it retraces more than 50% of the flagpole, it's not really a flag at that point. It's just kind of broken down at that point,
Ah,
and that's what we're looking at there on that. But in this case, yeah, those are some significant potential support levels. It may not go back down to those, but those would be kind of key levels there on that. And but right now, nothing bearish on that.
yeah, James is right. I want to point this out, at least in one way, that the Fibonacci retracement at 50%, that's not a true Fibonacci level per se,
Yeah.
but it is one that is commonly utilized nonetheless. But where James is wrong is that Kevin is not always right. James, I'll just remind you, I am wrong frequently. I've said that more than one occasion, but I appreciate the vote of confidence nonetheless. Brent, one of the other areas that I've been talking about a little bit was transports, because I felt like transports might have been giving us a little bit of a heads up to the expected move in oil. And as soon as this decides to load, what we're going to see is it looks like transports led the move higher.
Yeah.
This was kind of in the face of expectations. It's breathing today, but we may have learned something before the market really took off here because the transports were kind of foreshadowing a possible breakout.
Yeah, I mean, obviously it's a sector that's very um, dependent upon the price of oil and excuse me, very sensitive to that price. And those companies are, they're, we think, more astute observers of the oil markets, and it seemed to be
Yeah.
indicating that the price of oil wasn't going to be a continual drag on those transport stocks. And so again, maybe kind of a buy the rumor, sell the news, so to speak. But from that perspective, that's a good sign. And not just from the price of oil, but for the market as a whole. The traditional kind of Dow theory is that transports can help kind of foreshadow the market as a whole because our economy is dependent upon transportation, whether it's goods or people. And so as the theory is, as transports go, kind of goes the health of the overall economy. Well, that's been a strong sign. And notice on transports, that's not going back. Like when we were looking at the SPX or the NDX, we were kind of flirting with the high. We're not flirting with, I mean, we
Hmm.
blew past the previous high on this chart here.
Yep. We sure did. And since you mentioned it, I'm just going to highlight the look at the Dow theory. And that's it here, everybody. 5-year weekly, Dow Jones on the left, industrials on the left, that is, transports on the right, transports trading at new highs, industrials bouncing possibly to new highs here in the near run. What we would like to see from a Dow theory confirmation stance is the industrial average making a new high in the next week or two here to more or less validate Dow theory. Doesn't mean we're going to get it, unfortunately, but if we were to just make some assessments, Brent, boy, that level that we fell back to here, that's the high, that was the same level it was at, when we broke out. So that is a perfectly appropriate spot for the industrials to bounce. And it looks similar here, right? Transports came back and tested the breakout and then exploded to the upside. Guys, this is not a bearish look at this moment.
No, these are 5-year charts, and
Yeah.
this is just these pullbacks that we've seen in the market just aren't lasting for that long. And the I don't know. I mean, I don't know if when things are going to change, but right now the market is just so resilient. No matter what news, no matter what, kind of lousy news you see, and think about, the market is kind of, it may have a little sell off, but it just seems to be shrugging it off.
Hmm.
It doesn't mean that's always going to be the case in the future, but right now that's how it is. And so for traders have been, or investors as well, I guess you'd consider this, are rewarded when they're buying on pullbacks. Again, I don't know what the
Hmm.
future is going to hold, but if in the past, if you have just said every time the market pulls back 10%, I'm going to buy, then that would have, over the past quite a few years, would have worked out very well for you.
Yep. That's the truth, Brent. Let's take a look at our sectors on the move today. Obviously, there's been a bit of a drawdown in energy, so this has been notable. The move here to an area of former resistance, potential support. It was at one point the highs we had to get through. So this is an interesting spot for energy. We're seeing materials pull back a little after a nice rally. Might be setting up a higher low. And then with industrials, kind of a similar situation, right? Trying to set up higher lows because we've made lower highs in these bounces, but we need to start making sure that we hold new elevated trend levels like the 50-day moving average here on the industrials. And, wanted to look at technology a little bit because you've seen a pretty significant snap here. Reminder that a lot of traders pay attention to the downtrend line. They'll draw this in, try to capture as many of these peaks as possible. Well, look at this one. I mean, I know that I didn't incorporate everything here. If I activate and move my oval, you've got these 2 days where we were above the downtrend line. But again, 2 days above the downtrend line does not necessarily break a trend. So the significance of this one to me, Brent, is the break of the downtrend and then the explosive move up. And we've seen basically the tech space up 6% just in a week. Again, getting pretty great returns on the sector level. Brent, is there anything else here from a sector review standpoint that maybe stands out to you specifically want to make sure we talk about here?
Yeah, let me just mention a lot of times, you know, there's some sectors do well and some others do poorly, and sometimes it's kind of like almost haphazard as to which are doing better. You just don't know which are doing better. Right now, it's a little bit more of a traditional risk on situation where we have IT over the last month. We have IT, discretionary, and communications being the top three performing sectors. The bottom performing sectors, staples, energy, utilities, healthcare. So those are traditionally more defensive sectors. And
Yep.
so just, that's kind of, it doesn't always work out that way, but that's kind of what we're seeing right now, just more risk appetite in the market, it seems like.
That's the truth. A little bit more risk appetite. It doesn't mean that we should all be comfortable necessarily. It means we should all be comfortable with whatever our level of exposure might mean for us. Of course, make sure you're defining it for yourself individually there. It's very important we do that. All right, let me see here. Brent, did you guys did I see a survey opportunity come through or not? I thought I saw a link, but I could be wrong. Maybe not.
I did not notice
Um,
one.
okay, what I wanted to do in the final few moments here was bring into the discussion some of these stocks that we've got in the news this morning. There were a couple of upgrades and then some downgrades, but I wanted to touch on one of these. It was a news headline on Broadcom this morning. So Broadcom got a little bit of a lift in the aftermarket yesterday. I saw it up about 10 or 12 points on news of a multi-year, multi-generation partnership with Meta. And as soon as this hits, there we go. So you've got a Broadcom moving about 4% here today. And so what they're doing is a strategic partnership to support Meta's AI compute infrastructure, building on their existing partnership already. Broadcom's going to deliver technology supporting training and inference accelerator with plans to extend through 2029. And the market's clearly enjoying that here, Brent. So
Yes, and this is just a
a
continuation. I
nice
mean,
move in Broadcom today.
yeah, and this is just a continuation. I mean, we're up about 30% on Broadcom over the past 3 weeks here. So
Hmm.
the momentum continues, and this is just more, this is more reason for it, I guess.
Yeah, I can't try not
Did
to
I lose you?
deny it, right? I mean, you've got a good rally in place. Moving averages are a little slow on this one, right?
Yeah,
Yeah, like a 10-day would traditionally be thought of as real speedy, and yet using that here, you're giving up a lot of downside, aren't you?
yes, and so that's exactly how it is. And it's a challenge if you're getting into a trade such as Broadcom after it's gone up this much. It doesn't mean you can't do it. You just need to be aware that when it goes up this fast, it can drop more quickly. So, one strategy some traders will use is they will go in and then they'll put tight stops in. Now, of course, stops don't guarantee an exit at a
Hmm.
particular price. And but you know, you just need to be aware when you see this higher volatility. Volatility goes both ways. Volatility is not unidirectional there. So we could see a quicker drop off on that too.
Hmm. We also had an upgrade today, Brent, in Cloudflare at Piper Sandler. Let me bring that one in. That's ticker NET. Cloudflare was upgraded to overweight from neutral with a new price target at 222. The firm is positive on the company's infrastructure positioning across multiple growth opportunities, and that 222 target it represents a pretty good upside for the stock, about 30 points plus from where we are. So 15% plus. It kind of puts it into the neighborhood of the prior highs back here.
Yeah.
The thing that stood out to me, Brent, was just the if, and granted, we know that these price targets, whether it's a measured move approach by me drawing some kind of Fibonacci extensions or the analyst target here, they're not guarantees to be achieved by any stretch, but the risk reward may favor the bullish trader here who's willing to move on if it made new lows, as an example.
Yeah, and even before the upgrade, just from a purely technical analysis standpoint, you when
Hmm.
the 2 lines you just drew were kind of more obvious support levels and resistance levels. And this is, you know, you actually just
Hmm.
said something that made me think of something I was going to say earlier, and then it slipped my mind when we were talking not just about an individual stock, but the market as a whole. Traders can view things from the risk reward perspective. And if the market has moved up as much as it has, then that shifts the how much future reward possibility is there in the near term versus how much risk there is in the pullback here. And we can
Hmm.
flip that around on this particular stock that, hey, we have more headroom, so to speak, before we hit a resistance level than we hit a support level there. So I think it's good you brought that up, Kevin. I think it's something that traders need to think about very often, and that is what's your reward, what's your risk on whenever you enter a trade.
Yep. And I try to bring that up frequently. If you're attending many of the classes I host, you've heard me speak to that pretty commonly. Of course, I might sound like a broken record if you attend all of my classes, but I can't help get away. I can't get away from it because it's just so important. The last one here, as we wrap things up, everybody, Symbotic got an upgrade as well at DA Davidson. They were upgraded to buy from neutral with a target at 70. That's lifted from 57. The thing that I liked about this one, the reason I brought this up Brent, is because what this offers might be a broken downtrend. And again, I'm not saying that I like the stock, but rather the shift that we've seen, the result of this upgrade here is a broken downtrend, and a lot of traders are going to take that to heart. So, whether you drew it like so and you capture all of that off of the actual peak, or some traders might just draw it from maybe a little more visually like so, like this. And either way, it looks more like a recent shift in the downtrend, Brent.
Yeah, and you can tell that reflected in the moving averages as well, Kevin. We're above the 2050 200 right now, and we'll see if we get
Yep.
the if it holds. But right now, that looks like it's the winds are shifting, so to speak, on this stock here.
Hmm. Yeah, and if we were going to be picky, we would call out the fact that volume's light. It has been kind of weak. It wasn't in real accumulation phase. If this is a legitimate breakout, we would think there could be some good volume behind it. So watch the volume here. Let's see if we can get a bit of a validation spike in volume there going forward. So, all right, everybody, we're going to have to wrap it up there as we are at time. As always, Brent, a lively and positive discussion for our traders today. Appreciate you sharing your thoughts and insights with everybody, as always, Brent. And I really appreciate you stepping up for me because you're going to be in charge of the show over other periods as well. And I've always appreciated you stepping in while I'm away. So thank you so much.
Love being on this show, Kevin. I always look forward to Wednesdays with you.
I do too. And big thanks to Barb, and thanks to all of you, not just for being here, but for participating in the chat. Love hearing from you every day. Follow us on X. If you liked our discussion, hit that thumbs up button but for us down below. We will get this reviewed and archived and into the platform for you as soon as possible. Hope you all have a fantastic rest of your Wednesday, everybody. Look forward to catching up with you again real soon.